for the forecast of Coca-Cola, the forecast is a sheet of projections for the future, and for us, it'll be for the next 6 years. This forecast indicated Coca-Cola will be very successful over the next 6 years and shouldn't have trouble generating revenue. Based on the assumption of Coca-Cola staying in all current markets and with a slight increase in sales from a year-to-year basis, it's safe to say Coca-Cola will steadily increase revenue, but not by too much due to COGS always going up. The methodology used to put this forecast together was a mix of data and market trends. I think the numbers are fairly accurate given the information and assumptions that were made, but they are still just projections.
Okay. Done?
Mm-hmm.
Awesome. So I had forecast development. And for my section, so most of the information, you can find in the financial statements like cash flow, balance sheet, but you also need to do a little bit more of a deep dive to go into the actual note section of these analysis, because they do offer insight as far as some of the information that the forecast developments needed for the detailed figures. And based off of what I saw throughout my research, it does seem like Coca-Cola is spending a large amount of money investing into its infrastructure and its growth at a steady pace, starting from 1.3 million in 2001 to 1.8 in 2023. So it does seem like they do have a methodology around investing into their infrastructure and having a safe way to plan out their future expenses and their future depreciation expenses as well. We just showcase good financial planning and a clear strategy for maintaining their assets and just ensuring that they have long-term operational efficiency and financial stability throughout the company. So, from this data, it does seem that the company is well positioned to sustain its growth and continue to make, strong strategic investments in the future.
Hi, everyone. I'll be discussing the overall valuation, focusing on our valuation parameters and assumptions. When we first addressed our assumption, we set the current share price at $58.30 with 4,308 million shares outstanding, giving us a current market value of approximately $251.2 billion. For our overall growth assumptions, both our long-term growth forecast and the growth used in valuations are set at 3%. It's crucial to align these to ensure consistency and reliability in our projections. When we move over to our overall cost of equity capital, we've calculated our equity risk factor or market beta at 0.48. This factor indicates how Coca-Cola stock price is expected to move relative to the overall market, including coupled with a risk-free rate of 4.35% and a market risk premium of 4.6%. We came up with the required rate of return of common equity at 6.56%. Now, when we consider our overall cost of debt capital, we determine a before-tax cost of debt at 15.5%, adjusted for an effective tax rate of negative 19%, which results in an after-tax cost of debt capital of 12.56%. When we go into talking about our weighted average cost of capital, also known as the WACC, this overall metric combines the cost of equity and debt, and considering their respective weights in Coca-Cola's overall capital structure, with the equity compromising at 94.19% and debt of 5.81% of our capital structure, our WACC is calculated at 6.91%. It's important to note that every time we adjust those parameters, it ends up impacting our valuation results. For example, if we alter our growth assumptions or change the overall cost of equity, it can also change our estimate of Coca-Cola's intrinsic value. So it's important for us to continue to maintain accuracy and consistency in order for these assumptions to be successful in our overall evaluation. I think these evaluation models underscore the importance of our assumptions and the impact of on our overall investment decisions. They overall highlight Coca-Cola's current market pricing relative to overall how they calculate their values, and it guides us in order to make informed investment strategies. Thank you for watching, and we hope that this provides clarity on our overall valuation parameters and their implications for Coca-Cola's financial analysis. Thank you.
Thank you, guys.